Hello, Carl Baker here with Infinity Commercial Capital, and I just wanted to do another video to talk about interest rates, all the buzz in the markets about the economy, what's happening with the economy, unemployment, the CPI index and the inflation indices, and the correlating impact on interest rates. I'm recording this before the Fed Reserve does its meeting taking place here in December, so there's lots of speculation as to what they'll say and do, although there's no real expectation that they will do anything to the Fed funds rate. So we'll see if that sticks. But certainly people at the end of 2023 are starting to wonder what 2024 will look like. We've obviously been in a rising, higher than recent years interest rate environment. Rates have certainly, we all know if you're following the markets, interest rates are higher than they've been in a while. Not necessarily at the peak of history, but certainly higher than they've been in the last decade. And so people are wondering now that we're going into 2024, into a presidential election year, as inflation is allegedly coming down, as various things in the economy are happening, what will happen with interest rates? There's a general view that rates will come down some in 2024. We'll see how much. But I wanted to talk about what that might mean, because I get a lot of requests from just interested parties asking me how business is and whether we're getting phone calls. The notion is that possibly real estate investors are slowing down because interest rates are high. Why would you buy anything when interest rates are high? That's the speculation or the assumption when people ask me. And it's just not true. Certainly interest rates are putting pressure on investors as they're evaluating properties, but it doesn't mean that people are just pausing altogether. Now, though, that we are starting to see the possibility of declining rates, what I wanted to talk about was, what does that mean to future prices? So think about the concept of real estate investing. The win when you're purchasing a property, the win is actually getting the property, not the interest rate, not whether you shaved a quarter point off of an interest rate. The win is actually getting the property. As we think about the fact that rates will be coming down, the pent-up demand that is probably there will create additional demand, will unleash the forces of real estate investors, and if you're talking about residential property, people buying residential properties, that will very possibly cause prices to go up, home values to go up, property values to go up, and therefore, as interest rates are going down, that makes the financing cheaper, but the financings will be tied to higher prices than they are now. So just think about that and think about whether now might be a good time to buy rental properties or other types of properties, keeping in mind the win is actually getting the property. So we might be at a temporary trough where prices will possibly go up in 24. There's certainly lots of factors, but that's certainly one notion. So if prices do go up, then is now the right time to buy. And don't necessarily know, you certainly have to look at the entire deal, but just keep in mind that as we're all looking forward to interest rates going up, the correlating impact on valuations and what that would mean in terms of buying now versus later. So give us a call if you'd like to talk about that, and we'd be happy to work with you. Thanks a lot.